And we're shake-a-bow-baka-bow-wow.
And we're live. Hit the button, Addy.
Oh, Kempers comes in. Here we go with that hot track. You know you like it. You know you want it.
It's another Wednesday.
Boom, shake-a-boom, boom. I love it when Casey just zones in on that theme song. He gets that head bob. What is that?
But I gotta
give that to me again. A little shaker baker.
I gotta keep it cool though. Not too many dance moves is what I was told on the set.
One per dance song.
One per song.
Your daughters told you that?
Yeah, pretty much. They're like, Dad, you don't got flow. My 7-year-old needs to teach me some better dance moves, so I'll get lessons at home.
How's Kempers doing?
Doing good. It's been a hot week, but we're back in the studio, and we got some hot topics to talk about today.
Yeah, we do. So, bringing to the table, I'm going to let Casey, what are we talking about today?
We're going to get in depth on some student loan talk. I know a lot of our clients have been asking us questions. You know, how can we set ourselves up for a better buying opportunity? How can we maybe structure our debt a little bit different? Or I know, CK's had clients reaching out specifically about student loans. Hey, can we refinance these? What's going on in the market? We know we got a lot of stuff going out there, especially with different government programs, CARES Act, stimulus, stuff like that affect student loans. And we are going to dive in on it today.
I think dived in is probably one of the most overused
words. And we always
wait, you say misused?
Overused, dived in, dialed in.
I'm just trying to think of different options.
Jump.
We're going to jump in. Yeah, that's good. We jump.
Cannonball.
You keep going to swim pools. You're hot, obviously.
Look out for the jackknife.
I guess you could use unpack.
Yeah. We're going to unpack student loan talk today for you guys.
Yeah, they've been packed. They've been in that box that no one really wants to talk about, but everyone wants to know about. We're going to unpack it today.
Let's unpack it.
Let's start off with story, because Christian, you were saying that you had this situation come up just today.
Yep.
Or recently. I couldn't remember exactly, regarding student loans and essentially a storyline win. So bring that in. Tell me a little bit about that, because I know I cut you off when you were timing. I was like, save that for the show. We got it. People need to hear this. So.
Well, I came in hot today talking about an awesome experience that I had on helping some clients refinance some student loans. I believe we had about $28,000 in student loans. And it's funny that the average here in Oregon is right around $23,000. Nationally, we're right around $33,000 per person dealing with student loans. So
wow.
They kind of fit the averages, but it's never been a better time to kind of look at that. And how is student loans affecting our clients that are looking to get into a home purchase? My goal this year is to help as many people out as possible to kind of just dive in to
unpack
to what it looks like on just a debt to income side. So we actually looked at all the debt to income on the student loans. It's $1,100 a month in outgoing bills.
So their minimum payment on their student loans was over $1,000 per month.
Yeah, and it's anywhere from 7 to 15-year terms. They're all over the place, so it's hard to kind of really gauge on how we're going to get those paid off, come up with a plan and everything else, because they were just looking to either defer them, take advantage of the next step in their life. And a lot of those are actually income based on how much you have to pay, depending on what you make per year. But in this case, they had great credits. They met all the boxes to purchase a home. They were paying $1,900 in rent. They were just outgrowing their place.
And they were just held up by this $1,100 a month student loan payment.
Well, what I could qualify them for was right around $325,000 purchase. It just was not going to meet their needs with their 2 children. So in order to get them to where they need to be closer to that 425, they even had, a nice down payment. I mean, they fit the box. It's just this one thing that was holding them up. So we looked at all the interest rate. I just had them send me every statement over. And
for the student loans.
That's correct. And we were able to use a source to go ahead and refinance all those into a 15-year fixed loan. And it was like 2.25%.
Oh, wow.
It was just crazy. Now, on average right now, we're seeing anywhere from, this is based off of Forbes today, is 1.99 you're going to see terms of 5-year fixed all the way up to 20-year on the private side of things. You're going to actually get a better interest rate refinancing on the private side. Now, if you're taking advantage of the federal side, we're seeing those rates anywhere from 2.49% on undergrad loans to 4.3% on graduate loans. So that kind of just gets you an idea. But for me to be able to drop their interest rate from, anywhere from 9% on the high side, 7% was probably 7.5% was probably the average. It got it down to about $300 a month.
That's a huge nugget right there that I just want to grab for the audience and the attention.
Grab that nugget.
Guys, I mean, if you're sitting there and you know where your student loan interest rates are at, and you're obviously seeing these things, anywhere above that 4% mark and stuff like that. I mean, what CK just laid down is there's opportunities for you guys just to save, even if you're not purchasing a house and you're thinking about refinancing just your student loans, and I'm sure we'll talk about a little bit. There's opportunity there. So
definitely, I mean, that opened up $850 a month, and that was what it took in order to get them into that new purchase. And it's so funny because now they are one of my biggest referral sources, because they thought that it was going to take them another couple of years, just like everybody. They come to me and they want to know, what is it going to take? Just give me the numbers. What is it going to take for me to get in the house at this price? And that's a great answer. That's really what homeowners or home buyers want to know, especially the first home buyers. They don't know what an inspection will cost, all the little stuff. Man, it's so important to know those things up front. And so as we are talking through all these things, we're allocating, we're coming up with the game plan. We know that now we're 90 days out from where we need to be, And it's funny because once they get that, the juices rolling in and have a game plan, most people are going to execute.
Right. No, that was great. I think the story also was a nice lesson. Like, oh my gosh, I feel like applause or that's no, I don't even know what the applause, but that's the cricket. There, we got it. 4 buttons later.
There it is.
But in all seriousness,
we'll get the soundboard down. Don't worry.
But that was a really good breakdown. Just going through, like, man, it's so impactful. It's very, very common. What was it? You quoted it. 30-something million Americans have student loan debt.
Yeah.
And the average being around 30 grand, kind of doing some rounding there. That's pretty significant. So being a heavy purchase lender, that's one of the top questions. It was like, do I pay off these student loans? Do I this or do I that? And I want to intro with saying, if you haven't listened to our Follow the Money, which was a great episode that we did with our operations manager, Scott Kurahara, which the hat he was wearing in that episode, I get everyone loves that hat, by the way. I'm just going to throw out that you can get that on Made in Oregon, because I'm getting, it's a cool hat, but I get an email on that every freaking day. So if you want that hat that Scott was wearing in the episode, Follow the Money, can you pawn a gold chain and use it as your down payment? A segment of that is actually all about what to do, because I think a lot of people want to huddle up to the tee box, if you will, take care of all the stuff before they talk to Christian, before they talk to Casey or myself. However, and I think this is an organic realization, it's best to have that conversation now, because in a lot of instances, it's best to wait. It is best to wait and have a plan to where your financial representative or mortgage advisor knows what we're going to do. Because there's a lot of cases you might or might not have to pay down certain debt, including student loans. So there are some people that go and they finance it and they took out this big payment. And they're like, oh, this is great. I got these all set up. And they've actually decreased their buying power, going from deferred to amortized payments. So it's not always in your best interest to set it up before talking to a mortgage advisor. So I think I want to dive in really quick. Gosh, let's unpack. We're unpacking today, right? Sure. I'm going to use that term. We need a moving box tape. Wouldn't that be good?
We're not.
That's another.
Yeah, we need a sound button. Well, I'm going to ask Josh, our awesome producer, to see if we can get an unpacking of the tape button on there. But let's go into how different loan products and student loan debt is evaluated, at least from a pre-qualification or pre-approval standpoint, moving into contracts. So I think we'll round robin it here. Sure. But I'll start off with conventional loans, not government loans. When it comes to conventional loans, you're either running it on Desktop Underwriter or the Loan Prospector system, two different automated underwriting systems. The DU1 will account for deferred student loan balance 1% toward a hypothetical payment, right?
That's right. So $30,000 in student loan debt, we're looking at a $300 payment. Or excuse me, $3,000 payment.
300. 30,000 for 300.
That's right.
Yeah. No one may be getting houses.
0.001.
No one can get houses at $3,000 hypothetical payment. But yeah, no, that's a good point. So if you owe 30,000, which was that average, it is going to act on your approval amount similar to having a $300 car payment, right, Casey?
Yes, sir.
And I believe that Freddie Mac or the LP is going to be at 0.5%.
Yeah, and that is a big advantage because, guys, we get a lot of people who have talked to a different advisor and they only used one system, right? So they pre-approved them only on the 1% versus the 0.5%, right, Casey?
Yeah, and that's a big deal, and that could just be maybe your lender overlays. So who you're talking to might just have that one option for the 1%. But Addie and CK mentioned, no, there's a couple options for those conventional loans, 1% and 0.5% hits, depending on what you're using. I'll touch about my veterans and my VA buyers. When we're looking at student loans for theirs, if a student loan is deferred out longer than 12 months and we got documentation from the student loan lender to show that, then we can exclude that and not use a payment for the veteran. The other option is kind of looking at that. If it is deferred and it's, within that 12-month period, then we have to, and there's no payment, we have to hit them with a payment. So what we're going to do is take 5% of that balance and divide that out by 12 to get us a monthly payment. And then
so you just went in right there. Like, I don't want people to miss that. On the VA, it is calculated much differently.
Much different.
Rather than a flat 1%, they take the 5 and then make it another step, divide that by 12.
So you're essentially 5% of your student loan balance divided out by 12 for your monthly payments.
In most cases, it's lower than conventional or
yeah.
FHA.
In most cases, you're gonna be having a little bit lower payment. That'll help you at least from our approval standpoints. But there's another catch to that as well. If there is a payment showing on there, you'll do that same calculation, and then you're going to be using whatever one's the highest reported, either that calculation or what's showing on that credit report for the student loans for those veteran borrowers. Again, you need to have your student loan documentation to make sure payments are exactly what they are and stuff to verify. But long story short, conventionals have their own requirements for calculating student loans if there's not a payment. VA have their own requirements for calculating student loans if there's not a payment.
And I think one thing to take away from that is what you said, Addie, is that we are both a Fannie Mae and a Freddie Mac shop. So we have a lot of different choices to run our clients' different scenarios through. It's in our best interest to run both products for you.
Yeah, good point. And I think some people, whether it might be a broker who doesn't use internal underwriting or processing, they might use different companies to outsource those, might try to stick someone into a product that doesn't allow for the higher approval amount. So it's important to work with individuals who are familiar with the two different routes. Going to another baseline though, because very common, and we've had a lot of episodes on this, is the FHA, and then also back it up with the USDA. And when I say USDA, it's not packaged meat, it's the rural approved loan program.
We are not talking about
We're not talking about the deal you get on your New York strip last weekend, which, man, groceries are getting expensive, dude.
Yeah, same with meat too. I mean, stuff
meat.
Is
where's the meat?
Where's the meat?
Beef. It's probably not what for dinner right now.
It's probably what's for dinner.
No, not for dinner, because it's too expensive.
You get rice and corn.
Grass fed. Come on, we're grass fed around here. But FHA, USDA, those two products are going to default, right, Kempers, to that 1%.
That's right.
So another really good thing to know. Now, and I don't want to get too on this tangent, but what if they have payments set up, guys? there's a couple key components if you already have payment. Oh, don't worry about it. I got my student loans already settled. One thing to make sure they will use that payment. I feel you want to get in, Casey. So no, take the torch.
Well, I was gonna touch in on that is kind of with that. Yes. The biggest thing I kind of look at when, someone tells me, hey, I have payments set up and stuff, that's great. But are those payments amortizing?
Fully amortized.
Yes, sir.
That means that if you make all your payments within the agreed upon loan term, like 10 years, 20 years, will the note be completely satisfied and paid off? So in some situations, there might be, Christian, like a teaser, and it actually doesn't amortize and pay off the loan, which some people refer that to like an interest only. Right. So you can't just interest only your student loans and have the lower payment so you can increase your approval. I think that the general term, guys, is like there's no getting around it. Like there's no shortcuts anymore. Like for anyone that hasn't done a mortgage since maybe 2008 to 2010, the mortgage industry has really done a nice job of actually building out compliance and guidelines that protect us from a lot of stability, meaning like it's hard to cheat. You can't cheat the system anymore.
Our job is to show the ability to repay the loan, and so we're double checking and making sure that you do have that prior to these changes. If your loan was deferred for up to 3 years or greater, we didn't have to hit you with that. And we know those payments are going to come down the road. So, fiscally responsibility of doing underwriting, we should be taking those in account so that we put you in a better situation. You're not borrowing more than you can handle down into the future. So
let's kind of bring it into a closing chapter here, more in the sense of the CARES Act, because I know you were telling me a lot about there's a lot up in the air. So tell me like kind of current events, because there's people that right now you can't even freaking make an automatic payment on your student loans.
Yeah, they're currently paused until September 30th. I know Congress has some bills, at the House right now, and the Democrats have a bill in the House right now for some additional relief up to December 31st. We think they're going to probably pass it till October. We don't know if they're going to be able to extend that till the end of the year. The COVID pandemic is really pushing this. And as we see things either ease up or tightening up, we're going to see what Congress does. And then with the CARES Act, we're also seeing that, with the pause and everything else, we're going to see times to refinance but is there a forgiveness? No, there's not. I know that there's some bills out there. Anybody with large student loan debts right now are probably following this pretty closely. What can we do? Because it is a burden on our society right now. It's one of the biggest things that's keeping people out of home ownership. And really what drives a lot of our economy is the housing market.
Yeah, very true. And I want to throw in too, something I didn't think about when we put together the agenda for today's episode is we have a lot of great products internally that are specialized for doctors. So physicians, dentists, veterinarians, to where if you have finished and completed your degree, you're starting your job, the student loans, because those are higher in that profession, guys, you can actually have some, if not all, case-by-case situation, relieved and not accounted into your approval amount, which can help a lot of people. So there's the doctor loan out there. And I think that's something that we forgot to mention there. So
yeah, for sure. Doctor dentist loan. And that can help, a lot of people just coming into their practice and just, coming out of school. Like obviously there's a lot of school that you have to get through to get those, doctorates. And can be a lot of debt added up.
That's that $3,000 payment.
That's that $3,000 monthly payment.
That's $300,000 loans out there.
And we've seen it, guys. I mean, we've seen it, in the six figures of student loan debt with clients. And imagine trying to make, $3,000-$4,000 monthly payments on that. It's not realistic for purchasing. So what Addie mentioned there is a huge benefit. So any doctors, dentists out there listening, I mean, know that opportunity is there for you guys as you guys get towards, the end of your schooling there. There's some other options out there too, for if you're not Dr. Dennis, you have student loans and stuff like that. There's also some refinance programs. I know we have a couple available that you can include student debts into that, and there's some, I think, advantages with the interest rates, a little bit of leverage there for it not being a true cash out. So there's some options for you if you're just looking to refinance and maybe relieve some of these student debts with your capital investment, your home loan, your home purchase that you have. There could be opportunity for us to just look at it, refinance, and maybe knock off, some monthly savings for your mortgage, and also maybe knock off some of those student loans. So options are out there for people with student loans. Do not get scared that you have them. A lot of people have them. Just talk to the right advisors. Let us help you get in a better situation.
Yeah, no, I love that. And I think that's a good segue to kind of our mid-episode break, if you will, in the sense that we put the theme song back on, we reset a little bit, and we give them a little talk about that VIP number, right?
Yes, sir. So we do have our own number that you can call. You guys want to hit us up for questions, comments, you want to chat, go over your scenario, you got student loans you want to talk about, give us a call at 503
VIP
9038.
boom chicka boom
yes,
boom.
sir. 503 VIP 9038. Give us a ring.
We are we're pretty on point today, guys.
Getting it.
We're not. There was no trip on that number to mid to end on the wrap.
Do we do our compliance?
Wow. Yes. Wow. Of all people, Casey comes in with the compliance rip on our commercial break here.
Sorry, I had to bring the mood down.
And I'm going to be swimmy shift, so no one's got to say the wrong numbers, and throw up the NMLS for each of us. Yours truly, adding that thrown in there. Then we're going to go to our main man, CK, a.k.a. C. Kempers, a.k.a. Mortgage Guru. Am I missing any other AKAs? Kemper. Some go with Chris, but it just seems wrong to me. What do I call you most of the time? What do you hear from me?
I think CK.
CK. It's so like it's so best ball on the golf course. You know what I'm saying?
I like it.
Over to our trusted veteran mortgage advisor. Thank you for your service always.
Yes, thank you guys.
Yeah, we appreciate you, and your license number is up there. And like these numbers are so gosh darn long for people that are just listening on the podcast. Unbelievable. We got to put in these compliance things. Everyone knows our license, but like for crying out loud, 1458123. I would pay some significant money to have my license number changed to just the number 4 or 007. If anyone could make that happen, I will contribute all the proceeds for that executed project to charity.
Nice.
Oh, that's nice.
Coming back though, guys, and I'm not trying to make this episode super long, but it's a big question. In going to the basics, because I love thinking back when I have these conversations, guys, like, okay, this is how I explain it. You got $100,000 right off the bat. You're going to be hit with a hypothetical $1,000 payment. So you just got, from a mortgage advisor standpoint, or applying for a mortgage, you just bought like a freaking Escalade on 27. Do they make 27s? We'll go 24s with old school spinners, everything, Land Rover, like huge car payment.
OnStar.
Right? you sprung on the OnStar.
That was the feature I was looking for.
Oh, that was a vibe back in the day.
The SAP protection clear coat, $2,100 upcharge.
Yeah.
But that 100,000 student loan balance for the $1,000 hit on the basic, if you win the loan prospector, you get it down to 500. So it is a huge impact. And for mortgage terms, $1,000 relatively, that's anywhere between 150,000 to 175 mortgage amount borrowed, purchase price, give or take. Tons of compliance asterisks with taxes, insurance, credit score, product, blah 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 blah. But that's a good takeaway. It hits you big. But if you can get with us, we can build out that plan, and you understand your different options. Like, oh, can you switch from DU to LP and maybe get a higher approval amount? So it'll
give you your buying power back, guys. I mean, that's what we're trying to do. Is we're trying to, if you're going to be stuck with monthly payments towards student loans, like, let us take a look at it to see, you know, how we can set you up in the best place so you can have the most, you know, home to buy. Because I mean, I'd agree with probably most clients, you know, that they could probably afford 400,000, but student loans are putting them at 250. Well, we can't find, you know, the house is hard to find at 250. So,
another quick thing that a lot of people ask me is like, okay, I've got student loan debt, I've got credit card debt, and I've got an auto loan. I want to tackle this debt, right? What should I do? First and foremost, not credit expert. I don't even know if there's licensed credit people, but we have to put on these disclosures. Not a licensed tax advisor, financial advisor. I am a licensed mortgage advisor in Oregon and Washington. Our team covers the entire West Coast, including California. That being said, here's what I say. I was taught, number one, by my financial advisor, you tackle the debt in the order of the highest interest paid. So typically that's going to be credit card debt, because those interest rates are going to range between 17 on the super low and 35 on the super high. I know everyone out there in the world has their 0 APR intro. You're typically going to want to crack that consumer debt. That's also what is going to affect your credit score typically, is that debt to income ratio on the consumer revolving debt balances. So that's one thing that I was thinking of, is like, oh, I got $10,000 and they want to tackle the student loan debt, but their credit scores maybe 630 because they've maxed out all their credit cards. Hit that credit card debt. There's other benefits that you can work with your tax advisor, financial advisor on student loans. First of all, student loans are set up for the long-term payoff. Ain't short-term game, right? And then depending on the year, student loan interest is write-offable. As of 2020, state of Oregon, I just wrote I don't have any student loans, but I saw that they were able to be written off. And I think that other factor too is the longevity of those long-term loans adds to a strong credit profile.
It does.
If you got a 10-year, you're making those on time, you're not deferred, you set up the payments, you're making on time, maybe $5-10 over, that can really strengthen the profile of your credit. I don't see people, like, most of the time, if you've got just consumer debt, haven't bought a house, you're going to be capped at a certain credit score every year because you just don't have diversity in the credit profile. But that adds a totally different bucket, separate from the traditional auto, mortgage, revolving credit, right, CK?
Well, installment versus revolving, it's a huge difference. So with installment, we have 60 months, and each month that you're paying it down, it's gone down, right? Installment payment. Revolving debt is going to be your credit cards, which are going to be revolving each month. That is one of the biggest keys. Obviously, it's used more than any other type of credit. So there's a lot of weight based off of that. And typically, like Addie said, those are the highest interest rate. Give you an average on a $15,000 credit card at 29%, you're going to be paying $600 in interest without even touching the principal yet.
And so many people are just so stoked they get points. You're like, oh, but I'm getting points on that. You get like $12 a month, but you're paying $600 in interest.
Exactly. And your minimum payment is $729. So you just made, $72 towards your principal and just made the credit card company a bunch of money. There's a reason why they're in business.
Well, and it's not like the consumer's fault. I hate to poke fun at that. Like, the marketing is designed for credit cards to trick you, but with that, going back to that points versus like, oh, I'm gonna charge you, I'm getting points on this.
Well, it's easy to fall into that trap and I'm gonna pay this off every month, and then something happens, the furnace goes out, and guess what? Now you just put all the groceries, the gas, and everything else on the Amex, and furnace goes out, so you pay that, right? So you don't want to put that on American Express because that's 29%, but you forget that everything else is on there. So it's coming back to sitting down with your advisor and just coming up with the game plan of how we can achieve that goal. But the revolving debt is huge. Attack those high interest credit card debt. We know that because of the CARES Act, and there's a lot of talk with student loans right now. I wouldn't touch those because we don't know if there is going to be forgiveness down the road. We know that there's different, we have a presidential election. I know Joe Biden's, coming off with student loan debt is one of the biggest things that he's going off after forgiveness. He wants to do $10,000, I think. There's another Democratic House bill right now for $30,000. So I would just say keep paying your, student loans. That's going to be, especially if they're federal. Those are the ones that you're going to have access to the CARES Act, government reliefment if something does come. The private loans are going to always have to be paid back, you guys. There is some bills that are presented right now for private loans too being forgiven up to $10,000. But we do know that where the House sits right now, we're not in a Democratic, favorable. So I don't perceive those being passed by any means. But with things changing here in the future, we don't know. But let's attack those high interest credit card debts. Let's come up with the game plan. We have stimulus money coming in. They're talking about the second stimulus, another $1,200, another chance to save towards paying off debt, down payment, whatever it may be.
Yeah, man. Christian's on fire today.
Yeah, he's killing it.
Man,
he's killing
this is like boom, shika boom, CK day. I really appreciate all that input, and I think it's just a super important, common topic brought up. So first things first, you just can't be afraid to chat about it and create a plan. And it probably sounds so annoying from our listeners because we say that all the time. Got a call. It's never too late. Set up a plan. But, at least if you choose to chat with us, we're here to help. We're here to break down the numbers for you. It's no skin off our back, like taking the time to talk to us, because we do this all the time, all day long. Right now, this is the high season for us. So most of us are working 7 days a week, 12, 13 hours. This is like our actual break of the week. We enjoy doing the episode. It's a little bit of marketing, and we get a break from Zoom calls.
Grind.
But great episode. And I think we can dive a little more into it too, probably in November, December, when we get that election period. It's going to be interesting this year. And keep an eye out, guys. We're going to have some really important episodes coming up. That we've got Fed meetings this weekend, which will dictate some interest rate movements. We've also got a presidential election. There's a lot of things moving here in the world, and we're going to be on top of it, sharing the information, right, Casey?
Yes, sir. Yes, sir. And just recapping for today, anyone sitting out there with student loans, know that there's opportunities for you to just refinance those. In-house. Absolutely. There's opportunities for you to do a refinance and maybe pay some of those off and just get rid of those bad boys. Get them gone.
Get them gone. Any ending? Oh, back.
At the end, you can speak to one of us three and have some great education advice. We'll look through everything. We'll try to find you a way that allows you to buy with student loans, or we get rid of the student loans. One of the two.
That was hot. Kemper's all-star badge for today.
Thank you.
Any ending notes from you, sir?
It's just this week, man. It was just one of those topics that just kept coming up. Student loans, debt. I think clients just want to know, where's my starting point? And that's what we're here for. So give us a call. Let's hear that VIP number one more time. 503
VIP
9038.
And also any other form of connecting with us.
Yeah.
Direct message, email, like all that stuff works too.
You guys know how to get a hold of us.
Shoot Casey a text message. I'll see it eventually.
Actually, if you do text that number, it hits us all.
Then do it.
So for all you listeners out there, if you are ever wanting to watch these videos and see what we look like, we got them all located on our Facebook page, MLO Podcast. Check us out. We got them all on there. More
content,
more going. Special thanks to our producer, as always, Joshua Billups. Josh, there's so much behind the scenes. Someday we'll get him on the table. You guys can see what he looks like. Super cool dude. Veteran guy. None of this would exist without that guy, right?
Yep.
I mean,
totally stoked to have.
Big stuff for JB in the house. We are constructing early stages to the YouTube channel too, and we're going to really focus on putting some short informational stuff, some 3 to 4 minutes. Oh, the song just went out.
That's all right.
Did you just whisper? Do we just whisper to them now?
We finish it like this.
Well, thanks everybody. This was MLO. I was your host, Addie Nett, and
Casey Carpenter, your veteran advisor.
You better bring
CK1 in the house.
And until next time, my friends, we will catch you later.